Hi there, folks. Welcome to another episode of the Chaikin Minute. I'm David Shulin. In today's Chaikin Minute, we are going to discuss one of the categories in the stock power gauge rating. Previously, we discussed the 20-factor model, the power gauge rating, and how it works. Today, we'll take a bit of a deeper dive into just one of those four categories with 5 individual factors that make up the power gauge rating. It does not matter what stock we look at. This stock, Aflac, happens to be the first stock listed inside my example list here because it's very bullish and it starts with an A. It really doesn't make a difference which one we look at because each and every stock uses the same 5 factors in the financials category. Now, to see the power gauge rating factors and categories, we can click the power gauge rating here. Our header will expand, and now we can see that Aflac is very bullish because it has very bullish financials and technicals, and it has bullish earnings and experts. Let's talk today about the financials aspect of the power gauge rating, which we know for Aflac is very bullish. By clicking this plus next to financials, the financials section will expand, and we now see the 5 individual factors that combine together when compared to other stocks in the Russell 3000 give Aflac a very bullish rating. First thing to notice, you may be saying to yourself, I don't understand. It's very bullish, but only one of the 5 is very bullish. How could that be? How could this be very bullish? Remember, this is a ranking. It is always in comparison to other stocks, to all of the stocks in the Russell 3000, right? So yes, only free cash flow here is very bullish, but we still have 2 that are bullish, one that's neutral, and only one that is bearish, none that are very bearish. That is better as a whole, as a combined group of 5 than most stocks out there. It's that simple. It's that simple. No, sometimes you might try to look at this and average out the 5, and you might be like, that's like kind of between neutral and bullish maybe, but that's not how it works. It's not an average of the 5. It's a ranking compared to other stocks. So what are we looking at? We're looking at long-term debt to equity. We're looking at price to book, return on equity, price to sales, and free cash flow. Of the 20 factors that make up the power gauge rating, 17 of them are compared within the entirety of the Russell 3000 for a Russell 3000 stock. There are 3 that are compared only to stocks within their industry group. Can't share which ones are specifically only compared within their industry group, but you can keep that in mind. And the reason for that is, some industries are very different. Your price to sales might be very different or something else in a particular industry. So it might look very bad for one industry. It might look very good for another. Most of the factors that make up the power gauge rating, the industry, is not really relevant to that. So we compare to the entire Russell 3000. What are these calculations exactly? Well, we can find this information in our user guide. Hop on up here to the product resources books icon and click user guide. Now, we could find this in the user guide, or we could search it, either one, whichever we prefer to do. But I can tell you it's right down here, power gauge factor reference guide. A little bit of an explanation. And here you go. Here are the things that the calculations look at. So what is long-term debt to equity? We're looking at the total long-term debt divided total common equity over the latest quarter, right? We're looking at the total long-term debt divided by the total common equity for the latest quarter. Timeframes could be different for some of these, right? What about price to book? Well, it's the current price divided by the book value per share, latest quarter as well. Return on equity, income available to common stockholders as a percentage of total common equity. This is the trailing 12 months, right? Trailing 12 months, different time frame. What about price to sales? Market cap plus long-term debt divided by sales for the trailing 12 months. And lastly, we look at free cash flow in the financial section. We look at the net free cash flow relative to market cap for the latest quarter. So 2 of these look over the trailing 12 months, 3 over the latest quarter. So those, of course, would be updated with earnings information, that sort of thing as well. We then take those 5 calculations, compare them, weight them, create your financials overall category. We'll be back tomorrow with another episode of the Chaikin Minute.